motherfucker. Alrighty. What do we have? Okay, we got live down here, live there, chat. I have no idea what that is. Okay. Good evening. All right, let's get out of that. Do not disturb. There we go. All right, so let's do this. There we go, and there you go. Let's get rid of stuff from last week. There we go. Alrighty. Let's get the ball rolling. Come on. There we go there, and there we go there. All right. Let's see who's in the house at the moment. What do we have over here? I'd like to share this whiteboard. Oh. Not quite sure how the hell we do that. Well, I didn't see it, so I can't say anything. All right, there's that. I have no idea what this is going on here. Let's close that. Let's close that. There we go. And all right, we'll see what's happening over there in a little bit. What's happening over here? Who's this? Believe 3 in 1. Hello, how are you today? Give me a minute. Still getting set up. Okay, camera rolling. That's going. All right, I think we are ready to roll. That's on. On and on. Alrighty. So, who do we have in the house? There are Golden SpongeBob. Okay. Hello there, Golden SpongeBob. How you doing today? Believe 3 in 1. How you doing? Paco, good evening. Who do we have here tonight? Jordies, Lordies, good evening. Marood, good AB, what's happening? Trade Academy, would like to hear what you guys are up to. Adrian, how you doing? Tommy, how are you doing, Tommy? Mikey, Adam, Hoosier in DC, Big Swan, Double Deuce. Laura, good evening. Donnie White, what's going on? Liline, okay. Frankie. Amy Duran, good evening. Eddie, what's happening? Eddie. Drewer, what's happening? Drewer. Hector, Talata. Just Me, Joe. How's it going, Just Me, Joe? Hope's all going well. Nate, good evening. Paul Disquale. Joe Kahn. Michael Dean, what's going on? Little Galaxy. Danny, Steve. Davis, what's going on? T. Rob Blogish. Kenwood. All right, Kenwood. Tater, Den, Club Med Tom. What's happening, Club Med Tom? Keen. All right. KP Sloan. Interesting. Good evening. Jog Nair Ninjas. All right. Veritas Ratio 1. How do we trade like Pelosi? Net worth started at 250, ends at 350. Well, she cheated. That's what you really want to do. Sit tight for 1 second. Alrighty. Where did we leave off? Okay. Ignore that. What else do we have? Keen. Corey, do we like Walmart? Let's take a look at Walmart just as soon as we're done with, what is that? Oracle. Cousin Astra, what's happening? Sungang, good evening. All right, Sammy, how are you? Sweet Den, Pelosi did cheat and got away with it. Yeah, I know, it's a sad situation. Sam Fancy Sammy Jammy. Okay, thank you for that. Sammy, thank you for that. Let's see where we are, see where we're going, see what's going on. Just getting ready to start. Goldfish before bed. What books do you recommend for beginners? Wade Cook's. Yeah, me too, Sweet Den. Wade Cook's Wall Street Money Machine. Isn't the game rigged? Which game are we talking about? Fighting for scraps while the rest get away with the cheat codes. Absolutely. I feel just as bad about it. North American, good evening. Alrighty. So, that being said, let's get the ball rolling. Good evening, everyone. My name is James. This is Dividend Stock Talk brought to you by the 10-Minute Trader, where I'm looking for a simple, safe, predictable, consistent 1% per week. Lily, thank you for that. So, basically, I'm going to show you what I do. You're going to give me some suggestions of some companies that you like. I'm going to run them through the mill and give you my opinion. And that's all it is, just my opinion. I'm 62, I'm retired, so I'm looking for something maybe a little bit different than what you're looking for. Simple, safe, predictable, consistent 1% per week. That is over 50% per year. That's my goal. That's what I'm looking for. We're going to look at Microsoft in a second. Sit tight. Simran, good evening. Jack, you don't happen to be Jewish, do you? That's an inappropriate question, Jack. What does my nationality have to do with anything? Okay? Think about it. It doesn't make any sense. CPB. All right, sit tight. All right. So that's a yes. No, I did not say that at all. With a name like Godino, how could that be Jewish? Seriously. And what would me being Jewish got to do with anything? Think about it. Caden, Coca-Cola, we'll look at that in a little bit. Yep, let's talk business. Thank you there, North 1683. Let's do this. Good call, but not buying Micron on its all-time high last week. Hey, I'm going to take your word for it, man. We'll take a look at Micron in a little bit also, but first and foremost, let's take a look at Microsoft. Wait a minute. Why not take a look at Oracle? It's already up here. Let's take a gander. First thing we always look at is the 1-year chart right there. First thing I'm looking for, 5 things. It takes me 3 to 4 seconds. Let's see how quick you can find them. The high, the low. Where was it? Where is it? And where is it going? That's it. That's all I'm looking for. Where was it? Where's the high? Where's the low? Where was it? Where is it? And where is it going? The last 30 days is what I want to see, because the last 30 days gives me a good idea of where do I think it's going next. D Prime. Thank you there, Mr. D Prime. That was very nice of you. So let's take a gander at this. Are you ready? Starlink and XAI merger. Well, now that would be cool. It would be. Think about it. But I don't know anything about it. So I couldn't speak eloquently about it whatsoever. I would have to do some research. Sweet Den, looking for a Jewish broker. Okay, you have fun with that. I'm not quite sure what religion has to do with anything in trading, but okay, I'm not going to argue with anyone. All right, let's take a gander at this. So, after we look at that big gap that filled, So here's the top. Now we're at the bottom. What's happening right here? The last 30 days gives me a good idea of where do I think it's going next. Well, number one, do you like this company? That's a big question. Do you like Oracle? You either like it or you don't. Well, the 30-day bottom was on Thursday. Actually, it looks like the bottom for the year, doesn't it? Let's zoom in a little closer. Nope, not quite for the year. Bottom of the year was back in April. Shoots up to 340. Now we're back to 140. Can you imagine that? 340 down to 140. Lost $200 per share. Okay, I still have some. Can you move the camera slightly? How's that? That's slightly. Just move it in a little bit closer. There we go. That looks a little better. All right, so Asian EV market coming to America. They have every impressive EVs. Well, alrighty then. We will see how it comes along. All right, so Oracle had its bottom last week. Now it's looks like it's turning around. Let's zoom into the last 30 days. Here we go. 30-day high, 30-day bottom, and then Friday looks as it's turning around and going back up again. So if Oracle's on your playlist, let's see what it looks like. Now, when I say I want something simple, safe, predictable, and consistent, I'm talking about a covered call. Because a covered call, you buy the stock, and then you turn around and sell somebody the rights to buy it from you for the same price I just paid for it. So if I'm paying $142 tomorrow morning, I want to sell it for $142 or whatever's close to it. All right, so we got a minor problem. Okay, minor problem. It's not something you see right away. You really got to look for it. So here it is. On Friday, the stock closed at 142.82. Now, they have something that's called after hours trading. Well, that sometimes changes things. Well, kind of does. Love the consistency, always streaming. Keep up the great work. Always learn something while watching. Okay, thank you there, Mr. Mike. So think about it. After hours changes everything because these numbers here don't change after hours. Only those numbers change after hours. That's it. Everything else stays the same as it was on Friday afternoon when the market closed. Well, most of us only trade during market hours. Well, it's 145.18 right now. Now, we don't have access to that. So why are they showing it's a 145? Well, whatever. So if we buy it first thing tomorrow morning at 145, I can sell it at 145 and pick up $3.85 per share. Now that's 2% or more. Well, I'm looking for just 1%. And 1% a week. Now I do weekly trading. I don't do monthly. I don't do annually. Okay. Okay, give me a second while I read some of these. UFO, Hood. Microsoft did that. Okay. Caden, we'll take a look at Coca-Cola in a little bit, all right? Thank you, Jack. You just got, thank you, Lily. Jack, do you have a religious preference? No. Oh, he's Jewish and he wants a Jewish broker. Well, I'm not a broker, okay, so I couldn't help you out with that whatsoever. That makes sense. No one Bertie Madoff. All right. Active on how to act now to Bitcoin. Advice on Bitcoin. I'm terribly sorry, dude. I just don't do cryptocurrency. Not yet, anyway. I'm new to your channel. Am in... Okay, I'm not 100% sure how to read that. Amine Leo 763. Welcome. Illinois Tool Works. Ooh, I like that one. How do you attain 1% a week? Do you do options or just price appreciation? Caden, you're new here. Sit tight. Everything will be answered as the night progresses. We're just getting started, so I'll be here till a little after midnight, only because the game ran late. Didn't want to be disrespectful for all those boys. I call them boys, yeah, because they're in their 20s and 30s. I'm in my 60s. They are actually younger than my kids. Now, I remember distinctly when all the players on the football team, on the Super Bowl team, were younger than me. That was in '85 when the Bears and the Patriots went at it. That was a long time ago. All right, let's keep the ball rolling. So, first one we're looking at is going to be Oracle. Let's check it out. All right, get this out of the way. First thing I want to change, New Jersey, what's happening? Jersey, I'll catch you in a little bit. First thing I want to do, okay, the trading platform that I'm using where I'm trading is Think or Swim, and that is offered through Charles Schwab if you like the trading platform. It's not a software, it's actually a trading platform. Okay, so first thing I want to change is this right here from single to the covered call, because that's what we are doing. We are doing covered calls. And 145, I want to do the 145, and there it is right there. And just one, right over here, just change the number. Come on. Just to one. And, well, that didn't work, right? Now let's do it. There we go. All right. Now, anytime I do this, I always want to make sure, what are the numbers, okay? So my 9-year-old, this was back in 2008, said to me one day, Daddy, what are you doing? Can you teach me? So for me to teach a 9-year-old how to invest in the stock market, I had to come up with some rules. Well, the criteria was easy. After all, being 9 years old, it had to be simple. It had to be safe. It had to be predictable. It had to be consistent, and no way for her to lose. And I say that only because as a father to a 9-year-old little girl, you don't want to see her crying. You don't want to see her upset. So the strategy had to be simple and safe so she didn't lose anything. Okay. So I came up with 5 rules. Rule number 1, what assets you trading? Dividend stocks and weekly options. So rule number 1 is very simple. Never buy something that you do not want to hold on to long term because it just doesn't make sense. Rule number 2, never sell anything at a loss. It defeats the purpose of the game. And yeah, believe it or not, it is a game. 4 red hotels. Wait a minute. 3 green houses, 1 red hotel. Okay, like Monopoly. 4 green houses, 1 red hotel. So we're doing the stock market. Same thing, but paper trade first. Understand what you're doing first before you put money up at risk. All right. Rule 1, never buy something you don't want to own. Rule 2, never sell at a loss. Rule 3, make sure the company is consistently profitable. Me, I want 2 decades. 2 decades of profits. That's 20 years. 20 years of consistent profits. That's what I want for where I'm putting my money. You can put yours wherever you want, and we'll take a look at it. But, it is what it is. It's going to be a yes or it's going to be a no. Rule number 4, weekly options only. Only because I grew up in the 60s and 70s. We went to work at 8 o'clock Monday morning, and Friday afternoon we got paid. Same thing with the stock market. It opens up at 9:30 a.m. and it closes at 4 p.m. on Friday. So that's what I want to do. Prime gifted $1. Thank you about that, Prime. That was very nice of you. So that being said, let's get the ball rolling. So if I like Oracle, this is the trade that I'm looking at for tomorrow. Buy one covered call, 13 February, which just so happens to be this coming Friday, 5 days away. The 145 call option. That means if I'm buying it at 145.20, that's the current price, and I sell it at 145, I'm still walking away with a profit, and the stock only got to stay above 145 by Friday. Well, right now, it's above 145. It's 145.20. So it's just going to stay where it is or go up. But then again, it is bouncing off of a 90-day bottom. It hasn't been this low in quite since April. Okay. New to stock buying, never trade or sell. New to stocks, bussing, never trade or sell. Okay, I have no idea what that means, Greenwood. Do you need 100 shares to do a covered call? Yes, you do. You need 100 shares to do one contract. So, here we go. One covered call, Oracle. 13 February. That means this option is going to expire this coming Friday. The 145 call option. Well, the profit's $397. The investment's $14,000. Now, depending on how you want to look at it, I look at things just a little bit differently. Okay, because I'm looking to create weekly cash flowing assets. That's mean I purchase an asset, and every week it gives me something on a rate of return. That's my goal. That's what I'm looking for. That being said, I'm going to throw a shirt on. I'm getting a little chilly. All right. Just a little chilly. It is, in fact, February. Wow, February. March and then April. Woohoo! Months are just rolling away quickly, aren't they? All right. That's a little better. So, after you figure out how much you're putting into it and how much you're getting out, what rate of return is that? Okay, to find out your rate of return, you're going to have to take the profit divided by the investment. That will give you the rate of return for 1 week. Well, that's what I'm doing, weekly investing. All right, so you're going to get the calculator. Run and cook. Shouldn't we start with the list of companies to buy 100 shares first? Oh, I'm going to agree with you. Hold on. You like Oracle just before the earnings? It was 220 at the time, now under 150. Okay, so Robert, chill, relax for a bit. I buy Monday morning and I'm out Friday, ideally. Now, does it work all the time? No, it doesn't work all the time, but it works enough to make 1% every week. Now, I'm not sure what you are looking for, but 1% a week for me is perfectly fine. I'm perfectly okay with it because it pays all my bills and gives me extra to do whatever I want. And I haven't even started collecting Social Security yet, so don't get me started on this one. They still look young then there. Yes, they do. I do, they do. All right, hold on a second. I'm going to hold the crowd right there. When you say you are out, do you mean sell underlying stock every Friday? Say run and cook, basically what I'm doing. If you understand what a covered call is, I buy the stock first. Then I turn around and sell somebody the right to buy it from me at a certain price by a certain date. So if by chance I buy it tomorrow morning at $45.30, that's the price right now, $45.30, and then I turn around and sell it to someone else at $145, then yeah, if the stock is above $145 come Friday afternoon, I'm going to get all my money back plus the profits, and then I'll move on to the next one. Ideally, that would work for me. Well, what are the chances of the stock being above 145 at the end of the week? That's the risk that I am taking. We'll look at it from a different point of view. Number one, do I like Oracle? Well, yeah, I like Oracle. Number two, where are they on their chart? Think about it. It's been going down, down, down for the past couple of weeks. It finally reached the bottom on Thursday. Friday could be the turning point of it going back up. So if tomorrow morning the market opens up and the stock is higher than the close on Friday, that would be 2 days to the upside from the 90-day bottom, which was Thursday. So all it has to do for me in this particular situation is stay above 145. But before we go any further, let's figure out what kind of profit that is. Okay, hold on, DZI trades. Just sit for a second. Okay, we're still getting started. We started a little bit late because of the game. All right, fine. Now, let's get down to business. Let's take it one step at a time. You guys give me stocks to take a look at it. I plug it in, show you the strategy that I've been using for the past 15 years, and then you decide whether or not, if it makes sense. Think about it. That's all. I'm not trying to sell you anything. I just want to see, does it make sense? Caden, sit tight. Okay? I told you, we are going to get to that. Just sit tight. All right. So, calculator. Let's figure out what the rate of return on this thing is. There's the calculator. Now, to get the rate of return, you take the profits, which we already said the max profit is going to be $3.97. All right. So, in the calculator, I'm going to put the profit, $3.97, and I'm going to divide it by the investment. Now, think of it this way. Okay, if I'm buying a weekly cash producing asset, how much am I getting on a weekly basis? Ooh, check that out. Now that was nice. Thank you for that. All right. So, profit, $3.97. Cost of the trade, including commissions and fees. That tells me what I have at risk, how much money I have online. So, it's $14,103. Now that gives me a 2.8% for 1 week. But here's the catch. Do I like Oracle? Is Oracle a company that I feel comfortable putting my money into? Don't be chasing the big returns. Not that 2.8 is a big return. It's not. But 2.8 every single week. Think about it. That's over 150% by the end of the year. Think about it. It's 52 weeks. 52 weeks every year. So if I can trade a weekly option on a stock that I like. Now, I like Oracle. I do. If you take a look at my trades, I buy and sell Oracle quite often. That being said, well, that's what I'm looking for. Looking for companies that I like, that I don't mind putting my money into, and that I want to create a weekly cash producing asset. 2.8. I'm going to save this one. Only because I like it. Give it a minute. There it is. There we go. First and foremost, one covered call Oracle. 13 February 26. That is this coming Friday. The 145 call option. Well, the current price right now is 145.31. Stocks only go 3 different directions, up, down, or flat. So if the stock goes up, I make my money, get all my cash back. If the stock stays flat, stays the same, I still get all my money, and I get all my money. I get that profit plus all my money back. And then if she goes down, she can go down Well, right now, it's at 45.31. It can go down 31 cents as long as it's above 45 by Friday, 3:59 p.m. I get all my money back plus the profit. But if she's under 145 on Friday, I still keep the profit and I keep the stock. And Monday, I turn around and sell it to someone else. So the thing is, every single week, every position in my portfolio gives me some rate of return. Whether it's 1, whether it's 2, whether it's 3, whether it's a half, is really irrelevant to me. My goal is 1% a week from every position that I have. Well, if my portfolio is 50 grand, I want at least $500 every week. That's a nice return. Anyway, let's keep on going. Okay, Passport Eric. We'll take a look at Pfizer and Merck in a little bit. This was 2.8. And for today, 2.8. Not bad, 2.8 for today. All right, what do we have next? Okay, we'll take a look at Microsoft first, because Microsoft was up first. Then we'll take a look at those. Gotta get back to the beginning. All righty, Microsoft, MSFT. That didn't work. All right, one more time. There we go. We ready? Take a look. The high, the low. Where was it? Where is it? Now take a look at the motion. Where's it going? Down, up, down. That's it. She's been falling for the past 4 months. Look, drop, 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 drop. Where's the bottom? Where's it going to turn around? Because that's what stocks do. They drop to a point, and then they turn around and go back up again. Then they drop, go back up, and they drop, go back up. Well, now it's dropping, and we're looking for it to bounce off of this bottom. Well, let's zoom in a little closer and look at the last 30 days. Because the last 30 days gives us a good idea of where do we think it's going next. Because I'm only curious about where is it going to end up on Friday. Because tomorrow's Monday. I do 98% of all my trades on Monday. Because think about it this way. Monday morning is the earliest you could take advantage of this week. Because there's only 5 days, Monday, Tuesday, Wednesday, Thursday, Friday, to get the maximum rate of return Monday morning to Friday afternoon, because you get all 5 days. All right, so the top, the bottom, up, down, up, big drop, keep going, and if you're turning right there. Same thing we saw on the last stock, Oracle. Thursday was the bottom, Friday's 1 day up. 30 days ago, we're at 490. Now we're at 4, and she's bouncing up. Does it make sense? That's always going to be question number 1. Does it make sense? Question number 2 is, do I like Microsoft? And then you just got to buy it. Well, let's see what Microsoft looks like for next week. Okay, I like this right here. Check this out. That right there is what's called a gap down. Gaps have a tendency to fill. What does that mean for you guys? Well, basically we're here. It looks like we're turning around, and if it is going to turn around, it should hypothetically come back and fill that gap up. So hypothetically, it should go from 400 back up to the 480 area to fill in the gap. Should do it. How long is it going to take? That we don't know. So you ask yourself the question, do I like Microsoft? Do I like it at this price? do I believe this is the bottom, now she's going to go up? But remember the 5 rules. Rule 1, never buy anything you do not want to hold on to long term. And long term may mean something different to you than it does to me. Because to me, long term is only 30 days. Because, see, I'm retired, so I trade on a weekly basis. I do check my account every morning. I got 5 questions I ask myself. What did I buy it for? What did I collect? What did I sell against it? What did I collect? Where does it look like it's going? And what should I do next? Those are the only questions I ask myself. Because I've already got past the first set of questions. Okay? Never buy something you don't want to own. Never sell at a loss. Make sure the company's consistently profitable. I personally like 2 decades. Weekly options only, and then make sure the numbers work for you. Okay, so the numbers for me, what am I buying it for? What am I selling? What am I collecting? And is it more than 1%? Also, what's the chart telling me? Is it time for it to turn around, go back up, and for me to jump in now? Or should I wait a little bit longer? Now, Microsoft, like we said, bottomed out on Thursday. Friday was the first day to the upside. I like 2 days. So hypothetically speaking, I'd probably get into this on Tuesday. If Monday is higher, of course. When you say you're out underlying every Friday, yep. Sorry about that. New to buying stocks, have not sell any. I'm in long-term stocks, but want to learn buying and selling. That makes sense, Mr. Greenwood. Thank you. Okay, there is no hate like Christian love. I have no idea what that means. If the shares don't get called away, do you close the position at a loss or hold? No. I don't ever take a loss. I prefer, no, I say that, but I try to never take a loss. I think last year, I took 4 losses. That's it. All year long, 4 losses. That was it. Which is not bad if you think about it. All right, let's get comfortable here, answer some of these questions. What if the stock takes a dive? Why does everybody always say that? Think about it this way. Use your 329160. Think about it this way. All stocks go down. All stocks go up. Because they only do, fundamentally, 2 things. And only 2 things. They go up, and then they go down. And then they go up, and then they go down. That's all they do. So what happens if the stock dives? They all do. Don't play this game if you're thinking you're going to buy something and it's never going to go down. They always go down. And they always go up. Because they only do 2 things. And if it's not going down, it's going up. If it's not going up, it's going down. It only goes 2 ways, up and down. That's it. All right. More questions. What else do we have over here? Okay, Allie wants to take a look at Micron and find out why we're not buying Micron. Wait a second. Hold on. We haven't finished Microsoft yet. Just chill for a second. All right, so I said Microsoft 2 days to the upside. Tuesday. So let's at least take a look for those of you who want to try to pick that as the bottom. Because after all, okay, you only make money, you make the most amount of money buying low and selling high. Well, this just so happens to be the low of the last 30 days. Think about it. The low of the last 30 days. Usually a low and then turns around and goes back up again. Usually. Not always. All right, so let's see what it looks like. The 405s, the 405s, yeah, 405s. Let's do those. Okay, covered call. Let's change that. Okay, right here. Going to change it from single to the covered because it makes a little bit more. And then we want to do current price 406. So we're going to do the 405. There it is right there. Just one. And let's do that. Now, here's what it sounds like. Always read it out loud so you can hear what it sounds like, so you have a good idea of what it is that you are doing. Print and Stitch Syndicate. Hold on. Sit tight for a second. By one covered call, Microsoft, 13 February, the 405 call option, 365 is the profit, 40 grand. 40 grand's a big chunk for 100 shares, but this is Microsoft. This is not a $5 or $10 stock. This is a $400 stock. So yeah, it gets a little pricey after a while if you play this game long enough. Let's see what the rate of return is. All right, the profit's 365 for the one option. That's it, 365 for the one contract. All right, so what is that one contract costing? Well, it's costing $40,135. And it's given, that's not even a 1% return. I'm going to say no to that one. It's not even 1%. Okay, the current price is 406. And I'm selling it at 405. It's just not bringing me in enough money, so I'm going to say no to Microsoft. Okay. Let's change everything back to where we were and look for something else. Somebody want to take a look at Micron. Well, Micron looks kind of interesting, if you like it, of course. Always going to come down to, do I like this company, and is this something I want to buy, and something I want to hold on to? It's just a choice, that's all it is. All righty, the high, the low, where was it, where is it? Look at this, down, up, down, up. What's going on? The last 30 days gives us a good idea of what's going on. Here you go, last 30 days. The low, the high, look at the movement, up, down, up. Okay, it bottomed out on Wednesday, Thursday, and Friday were up. So if she opens up higher tomorrow, that's day 3. Now for me, I like 2 days to the upside after a new bottom. See, 30-day top, pulls back. Now we got 2 days, 1, 2. Now she's going back up again. Does that make sense? You got to ask yourself that question. Why would you buy something if it doesn't make sense? South Florida fishing. If the shares don't get called away, do you always close as a position or potential loss or hold? I never sell at a loss if I can help it. Okay, last year I took 4 losses. Other than that, I don't like taking losses. But what I will do is always, what did I buy it for? What did I sell against it? Where's it at now? Where does it look like it's going next? And what is the safest trade that I can do to keep that money coming in and also protect my nest egg, protect my assets? That's my goal. I want money coming in and I don't want to lose any money. That's what I'm trying to do. Believe 3-in-1. I just got the Wall Street Money Machine per your call out a few weeks ago. Looking forward to reading it. Nicely done. It's a simple read. If you think about it, the guy's a taxi driver. And if you just listen to what he says, like, it can't be that easy. It was eye-opening for me. How do you manage trades when you get a large correction? Do you just sell at the money and roll it necessary to not sell below your basis? Okay, so that happens a lot because you buy something and it will drop. Well, they all do. Also, you're going to buy something and it's going to shoot up. But you got to keep an eye on what are your goals? What is your main objective? Is your main objective just to buy and sell? Or do you have a strategy? Most people buy and hope the stock goes up and sell when it does. And don't really have any rhyme or reason or any detailed plans to what it is they're doing. So if you think of it that way, why are you doing it? What are you looking to get out of this endeavor? Is this just to take up time, just to find something to do? Or are you seriously looking at a way to generate a simple, safe, predictable income? Well, because that's what I'm doing. Okay. Polkadot, okay. My dad always looks at the stock market, but currently the most I know is that silver has went up but dropped recently. Okay, nothing wrong with that at all. But what are you looking to do? I mean, I'm assuming you're here for a reason. So why are you here? Would be a good question. What do I think? What site do you use for buying and selling? Say Greenwood, I use Thinkorswim, which is owned by Charles Schwab, and I also use Robinhood because it's simple and easy right on my phone. Oh, Neofotolo from South Africa. Good for you. I'm actually going to get a map so everyone tells me where they're from. I'm going to put it in the map. So South Africa, I have to find out where in South Africa. South Africa is a big place. Okay, do I need to good at math and watch news? No, don't want to watch the news. Hello, Hecton McCoy. I've never even tried Moomoo, so I honestly couldn't tell you anything about Moomoo. I couldn't tell you about Acorn. I couldn't tell you about Webull. I couldn't tell you about a lot of companies. I just don't do them because I already have one that I'm comfortable with. Thanks, James. I'm using your techniques and have some positions that have dropped, which is why I asked about managing positions week to week. Okay, well, Nick Black, here's a thought. It's a thought, it's not a suggestion, it's not advice, okay? Number one, never buy something you don't want to hold long term. Number two, never sell at a loss. Number three, consistency of profitability. And number four, weekly options. If you follow those rules, okay, the rest should be relatively easy because stocks do go up and then they do go down. That's about it. So, hypothetically speaking, if you bought something and it went down a little bit, you got to keep in mind that eventually, as it drops, it's going to stop, then turn around and go back up again. Because that's all they do. They go down until they're done going down. And then they go up until they're done going up. And that's basically all there is to it. They go up, they go down, they go up, they go down. They drive you nuts. But anyway, what did you buy it for? What you sell against it? Where does it look like it's going? And what should you do next? Well, Micron, if you bought it up at 440, now it's down here. You got to decide what is the safest strike price that you can sell next week for the 13th of February. But you don't want to be at risk of losing, which means you don't want to be too close to where the action is. You don't want to be too far away where there's no income. So it's kind of like a balance in between when the stock goes the wrong direction, because that does happen once in a while. But you should always have some money coming in. Evan, what's the Sharpe ratio? The Sharpe ratio of what? You just can't ask for the Sharpe ratio. It's a mathematical equation comparing a certain trading strategy to what could have been or what should have been. So it depends on which one we're talking about. All right, Evan? All right, let's look at some more of this stuff up here. All right, so Caden, how do you obtain 1% per week? Do you do options or just price appreciation? No, Caden, I do options, specifically covered calls, because they're simple and they're safe. All right, thanks, James. I'm using your technique. Okay, got that. All right. What's up with Japan? Did they just stop printing? I don't know, because the Japanese market doesn't really have a whole heck of a lot to do with what we're doing here. Now, don't get me wrong, one market does affect the other, but to what degree? So that I couldn't really tell you. All right, let's keep going. Jack Massey, how many stocks fit your trading strategy? I went through the dividend list and only a handful have weekly options. Jack, about 300. Okay, you want to go to the CBOE, Chicago Board of Options Exchange. They will give you every single stock that has weekly options. CBOE.com. Caden, Fitness World. I've been holding VOO and I'm currently up, but it's near a 52-week high. So I'm thinking of selling and getting back in at a lower price. Now, see, I know nothing about you, Caden, but that sounds like a wise decision, okay? Because you bought and the stock went up. Well, great. Take your profits as the stock drops, okay? When it makes the bottom, turns around again, jump back in. So when it goes back up, you take your profit. As it comes back down, you get out. That just sounds like logic, if you think about it. Nick, perfect answer. Thanks. Been working the rules and making good returns. Love the help. Nice going there, Mr. Nick. My music Gen X. Ooh, I gotta love music. The Japanese market is booming today. Okay, but what does that have to do with the U.S. market? Can I ask what your return was for January? That's a good question. Believe it or not, I haven't really looked. Isn't that weird? All right, caught up with that one. How do you obtain 1%? Where did that one? All right, what do we have there? Oh, Mr. Green wants to take a look at ITW. Wait a minute. We're still on Micron. Sit tight. We're on Micron. Now, let's finish up with Micron, and then we'll do Illinois Toolworks. Wait a minute. Someone else wanted to take a look at some. What were they? We'll get to those. Merck and there's another one. Those two. Walmart and Merck. We'll do Walmart and Merck. Then we'll do Illinois Toolworks, and then University of New Hampshire. Here we go. Micron, 394. Well, the bottom was Wednesday. Thursday was 1 day up. Friday was 2 days up. So for me, if she opens up higher than she closed on Friday, well, then I'll jump in first thing Monday, because I like 2 days to the upside, and then on the third day, that's my cue to get in. You got to figure out what works for you, because we're all different. Now, we're all going for the same thing, profits. That's it. Profits are profits no matter how big or how small. You got to decide what it is that you are looking for specifically. Now, I'm looking for just 1% per week, and that just so happens to come to 50% by the end of the year. Okay, so hypothetically speaking, the 395s are going for 1540. That's a huge number. And do you know why it's that large? Mainly because Micron doesn't have dividends. So it's basically a gamble. All right, so do I want to buy it and pick up a nice premium? It's a question for you. Let's find out. Yep, I asked about USAR. USAR. Sit tight. We might get a chance to take a look at that because it's getting kind of late at the moment and I'm getting a little tired. Watched the game. I was a little disappointed. Don't know about you guys, but you know, it's what it is. Okay, so Micron. Let's do this. Okay, change it to covered stock. We'll be looking at the 392.50s because that just makes more sense. Wait a second. We already looked at Walmart. We don't need to look at Walmart again, but we will take a look at Merck. Wait a minute. It was Pfizer and Merck. Okay. Jason, I'm late tonight. How about Bank of America if there's time? Ooh, sit tight, Jason. All right, so one covered call of Micron. Here we go. One covered call Micron, 13 February, 392.50. The current price right now is $393, which means I'd be losing $1.76. But I'm making $1,500 off of $3,800. Well, let's find out that rate of return. Passport Eric, how do you make up the difference if you sell for a few cents lower than your cost? Passport Eric, sit tight for 1 second. I'm going to explain it to you in a minute, all right? So don't go anywhere. Oops, I sent it. That wasn't supposed to. So let's try this one more time. All right, here we go. One covered call Micron, February 13, 376. Oh, 1,500, 37,000. Let's see what the rate of return here is. Profit, 1,578 divided by the investment. Always, when you're looking at the rate of return, you got to take the profits and you divide it by your investment. That gives you your weekly rate of return. Kind of makes sense, doesn't it? All right, divided by 37,672, grand total of 4%. Now, the minor problem you're going to have with Micron is they don't have dividends. So, yeah, the stock is bouncing off of a 30-day bottom. Okay, but do you like Micron? Because remember, if the stock goes down, you're not getting a dividend off of Micron. You got to keep that one in mind. 4.1. Here we go. Wait for it to pop up. Come on, there it is. My one covered call, Micron, 13 February. The 392.50 call option. Well, 1,578 is the profit. 37,000 is the investment. Now, some of you guys aren't going to be able to do a $37,000 position at first. But maybe when you get in your 50s and 60s, you can. Because as you're building your portfolio, the numbers get bigger and bigger. The rates of return basically stay the same. So if my account was 20,000 and I was making 1% a week, okay, fine. That's, 50% a year, still fine. But if my account is $500,000, I'm still making 1% a week. It's just, a little bit bigger number. But as you progress, the numbers do get bigger. The rates of returns get more consistent. All right, so 4.1. $4.1. Next, Pfizer and Merck. Let's take a quick look. Got to go back to the beginning. And Pfizer, PFE, PFE. No. That was quick, wasn't it? Okay, it should not take you long to take a look at a 1-year chart. Because remember, we're only looking for 5 things. Okay? The high, the low, where was it, where is it, and where is the motion? Where is the flow? Where does it look like it's going next? Down, up, down, up. Well, where's it going next? Usually down. Let's zoom in a little closer so you get a better look at it. The last 30 days. Okay? 30-day bottom, 30-day high. Yeah, I don't buy anything at the high. It just doesn't make sense to me. So no to Pfizer. Merck, MRK. Hell no. Definitely not. I'd never buy at the high. No, no. Sorry. Yep, there it is. Passport Eric. No to Pfizer and Merck. Sorry. All righty. Thank you there, Tom. John, thank you. Is it normal to have more money in a brokerage versus a Roth IRA? Okay, John, it's always going to be what it is you plan on doing. Yep, I get it. Jason, we're going to take a look at Bank of America in a bit. Just sit tight. Thank you there, Mr. Benny. Print and stitch syndicates, Oracle call option rates, and that's expensive. Not necessarily so. We're not buying options. Remember, we're selling options. Aubins. Do you prefer cash secured puts or covered calls? I prefer covered calls. It's more positive. Cash secured puts a little bit on the negative side because you want the stock to come down or not go down, one or the other. What if the stock dives? They always dive. Sorry about that, brother. They all do. Yep, and there he goes right there. Risk 14,000 to make 1,000. Well, print and stitch. Let me ask you this question. Anytime you make an investment, it's always a risk. Everything. Actually, life is a risk. If you stay in bed in the morning, well, you risk missing out on the day. Okay, if you get out of bed and you go to the, you walk out your door, you risk everything you walk out the door. Okay, there's risk everywhere. If you want to do something risk-free, put your money into the bank and then deal with what they're giving you. They're not going to give you, 20, 30, 40% per year. They're not. Evan, what's the Sharpe ratio? The Sharpe ratio on what specifically, Evan? Gravy for all. Thank you. Cody, I'm not going to look at silver. Sorry. Can you explain, JT Father Chef Trader, can you explain how dividend stocks work? Okay. I'm going to be as simple as possible. You ready, JT? As simple as possible. JT, give me your money and I will give you a return on the profits. That's it. I will share my profits with you. Okay? So you give me your money and I will share my profits. That's basically the stock market in a nutshell. Now, who you're giving your money to, well, that's a you thing. You have to do a deep dive into, does it make sense? Because when you give your money or when you invest your money into any company, they take that money and they put it to work and they try to turn a profit. Well, there's over 10,800 different companies. That's a lot to choose from. So for me, I like companies that are consistently profitable, meaning they've done the same thing year after year after year after year. I'm looking for 2 decades. That's 20 years of consistent profits. Because that's what I'm looking for. 20 years of consistent profits. And I'm just looking for that 1% per week. I'm not looking for a huge amount. Okay, so Jason wants to take a look at Bank of America, BAC. And I'm going to say no to Bank of America this week, and this is why, Jason. Are you ready? Okay, here's the high, here's the low, here's where it was, here's where it is. Look, down, up, down, up. Well, let's zoom into that and see exactly what that looks like. All right? So, 30 days ago, we were at 57. We dropped to 51. Now we're back to 57 again. Well, what do you think is going to happen at 57? Well, probably the same thing that happened to 57 last time was at 57. It dropped down to 51. Well, if that's the case, well then, why would I jump back in at 57? Wouldn't it make sense? You know, if it was 57, it dropped, and then she went back up. Well, hypothetically speaking, it would appear that it's going to drop again. Because that's what they do. They're repetitive. They do the same things over and over and over again. So hopefully I answered that question. All right. Do you feel gold is safe to buy ever? Yes and no. How's that for an answer? Now, I personally not in a position where I can take a huge amount of money and put it into gold or silver or some kind of precious metal, because I'm still needing cash flow on a weekly basis to help pay my bills. So putting money into a storage vault, which basically what gold, silver, and any type commodity is, because gold and silver, they retain their value. They don't give you weekly cash flow. That's what I'm looking for. So if you want cash flow, gold is not the way to go, unless you're going to do gold futures and you know something about that. Anyway, Daniel, is it possible to use your strategy with $1,000 to start and learn as you go? Absolutely. You might like one of my new channels, okay? Because I got a new channel that we're going to get ready to start with my grandson. Now he's 6 because he had a birthday the other day, so he's 6 years old now. So we're going to start him out with a very small account, and we're going to do it step by step, not on a daily basis, but more on a weekly or bi-weekly basis. Because after all, he is only 6. Now, how do you keep the interest of a 6-year-old? So yeah. You can. Look up eBay stock. Okay, eBay. E-B-A-Y. Interesting. Let's take a look at eBay. The top, the bottom, where was it? Where is it? Look at this. Down, up, down, up, down, up, down, up. Okay, what's going on right there? That looks enticing. So, the last 30 days always gives me a good idea of where do I think it's going next? Well, it's pretty plain to see. 30-day high, 30-day bottom. Now she's going up. Well, because that's what it looks like. Bottomed out Wednesday, Thursday was higher, and Friday was higher. Definitely going up. We're at 86.55. The 86s are going for 187. Now, somebody asked me a little while ago, so, Santana, you're risking 14 to make 300. Okay, Santana, look at it this way, okay? Hypothetically, I'm buying a vending machine for $14,000. And this vending machine just so happens to be pumping out $300 every week. Okay, well, what's the rate of return there? That's number one. And number two, I can always sell my vending machine for the $14,000 I paid for it. Because see, if I refuse to ever sell for less than what I paid, so yeah, if I pay $14,000, I will never, ever, 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 ever sell it for less than $14,000. But here's the thing. That $14,000's got to go somewhere. Think about it this way, Santana. I've been working over 5 decades. My first job was in 1974, and I quit in 2023, which was 3 years ago. All this money I have has got to go somewhere and give me some rate of return. Okay? So, wherever I decide to put my money is my choice. If I decide to buy, let's say 20 vending machines, and each one costs $14,000, and each one gives me $300 every single week, well, I see no problem with that whatsoever. Because my concern is not really how much is the investment costing me or how much is my investment. My main concern, Santana, is it predictable? Is it consistent? Do I feel safe doing it? And do they consistently, that 14,000, do they consistently increase their profits year after year after year so it becomes a safer investment? So you're not the first one who says, oh, you're risking this to make that. Everything's a risk. If you buy the house next door, okay, the house next door here is about 500,000. Great. So I should spend 500,000 to make just a couple of bucks at the end of the month? Because think about it. If I spend 500,000, is it all cash? Well, if it is all cash, what am I making? I'm making $2,000 a month off of a $500,000 investment. Well, I'm not quite sure what the math is there, but for the fun of it, let's give it a try. So, calculator. So let's say, hypothetically speaking, why did that just turn off? All right. Hypothetically speaking, okay, let's say that I did buy the house next door for 500,000. And let's say I put all cash into it, 500,000. So, how much is 2,500 bucks, if that's what the rent is, off my 500,000? So let's find that one out. 2,500 bucks divide 500,000 for the cost of the house. That's 0.5%. Santana, answer me that question. If I bought the house next door, a piece of real estate, it cost me 500 grand, and I make 2,500 bucks all cash, that's 0.5%. So 300 a week, and it's only costing me 14,000. That gives me a 2.1% per week. So is it a good investment or is it not? You got to put your money somewhere, okay? Okay, whether you agree with what I'm doing or not is totally irrelevant, okay? Now, we as humans are the only species on this planet that's got to pay to live here. And to the degree in which you want to be comfortable is going to be directly related on how much money you need to live comfortably at the end of the year or at the end of the month or however you want to do it. But you are going to have to put up something in order to get some rate of return. And if you don't want to do it, give it to someone else. But me, personally, I think 1% a week is fine for me. You've got to figure out where you are on your journey and what makes sense to you. Okay, so let's keep on going. Thank you there, Benny. Rach, thank you there, Miss Rach. Jonathan, good evening. Can we look at Ford? Yes, let's take a look at Ford. Wait a second. We're still on eBay. Wait a minute, did we just do eBay? Let's do eBay at 86. Okay. eBay at 86. Now, I don't even know if eBay even has dividends. But, that being said, let's see what it looks like anyway. All right. Tap the screen. Thank you. Okay, Jonathan will take a look at Ford in a minute. Just sit tight. So, here we go. eBay. Buy one covered call eBay. 13 February. The 86 call option. Okay. Well, it's only giving me 144 as a profit, and it's costing me $8,400. Well, what rate of return is that, and does that make sense? Is it a good time to buy Tesla? Dan, we'll take a look at it. Sit tight for a second. Calculator. 144 is the profit. The investment, 84.56. What are we putting tomorrow? Michael, sit tight for a second. We haven't finished up with today yet. Okay, so hypothetically speaking, if you like eBay, it's a 1.7%. If I buy it at 8,400 and I sell the 86 call options, I'm going to walk away with 144 per contract, which is 1.7% for 1 week. Now, I'm okay with 1.7% for the week. Could I make more? Yeah, I could if I sat in front of my computer longer, but I have no desire to do that. I don't want to sit in front of my computer. I have other things that I can be doing. eBay. Here we go. Bloody well, it's eBay. Let's see what eBay is giving us. Well, we already know, so let's pick it up. All right, here we go. eBay. One covered call eBay, 13 February. That's this coming Friday. The 86 call option. 144 is the profit. 8,400 is the investment. It is a 1.7% return for 1 week. If 1% a week is 50% a year, what's 1.7 every week? And can you get 1.7 every week? All right, that's 3 so far. Can we get 2 more? 1.7. 2 more. What do we got? Ford. Let's take a gander at Ford. Wait a minute. We looked at eBay. We looked at Pfizer and Merck. Okay, we looked at both of them already. So, Ford, you say Ford. Not quite sure what we're going to do with Ford here. What's going on there? Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up, down. Okay, what's going on there? 1380. The 14s are going for 31. That's more than 2%. If you like Ford. If you like Ford. Because remember rule number 1. Never buy something you do not want to hold long term. Okay, and self. Why not the 147 strike? The premium was 85 less, but the 2-point increase adds to the premium by 200. Okay, and self, thank you for that. I'm not 100% sure which one you're talking about because we've already done a couple. Okay. Ford. All right, look at the last 30 days. Does it make sense? We're going to go to the 9th. Here we go. So, 30 days ago today with Ford was the high of the year. 1450. Then we dropped to 1320, back up, back down, back up again. So it is a nice slow ride up. 1380, the 14s. Oh yeah, that looks pretty good if you like Ford. Well, let's check it out. Let's get rid of this. Let's go to covered call. Let's do the 14s right there, 1 contract. And here's Ford. Buy 1 covered call, Ford, 13 February. Okay, the call strike, the profit, the investment, let's take a look at the numbers. Okay, so the profit's $52 per contract. Not a lot of money, I know, but how much is each contract? $1,300. Well, 1,348. What does that come to? It comes to 3.8% for 1 week. 3.8 for Ford. If you like, I'm going to write that one down for tomorrow. Most definitely. Alrighty. Alrighty. So, let's save that one. We're going to come up with one more. Okay. That was a good one. Ford. What was it? 3.8. And there it is. Buy one covered call of Ford. 13 February. The $14 call option. Look at the stock's at $13.76. So the 14 call option paying 52, and it's only 1,300 risk. That's it. Green, Mr. Green, we're doing yours next. Sit tight. Oops. Hit the button too many times. Come on. Give it a second while she loads up. What did we say it was? 3.8? 3.8. Gotta love that one. 3.8. We got one more to go. Come on, we need number 5. Who's got number 5? Who's got it? Let's get back to where we were. Okay. Lopez Sanchez trader, how are you? Unique perspective. Trenton, good evening. Thank you, Trenton. Okay, Mr. Green, Illinois Toolworks. ITW, Illinois Toolworks. What do we know of Illinois Toolworks? Well, let's find out. ITW. Hell no. 2 reasons. Mr. Green, you ready? 2 reasons. Reason number 1, I don't buy anything at the high of the year. That's a no automatically. Reason number 2, I don't do monthly options. Okay? February, March, June, September, November. I don't do monthlies. Once a month? No, I don't. Blank, we already looked at Microsoft. Which stock? Microsoft? Really, why ask some of that? Freckled Flex. How much do you earn per month? I'm kind of curious, why is it Frex? Why are you interested in what I earn per month? I earn more per month than I should. How's that? That's a weird number. More than I should. All right, let's keep on going. Look up eBay, we already did. Buy, got it, thank you, you're welcome. That's awesome, thank you, you're welcome. Everything is backwards like a mirror, absolutely. Do SoFi. Ugh, I hate SoFi. I do. Anytime you have something being rammed down your throat for big dollars, there's usually something not good there. Okay, so SoFi, here's the high, here's the low, here's where it was, here's where it is. Look at this, down, up, down, up. Okay, it's bouncing off the bottom. Look at your last 30 days. Okay, 30 days ago was your 30-day top. Bottomed out on Thursday. So she went from 28 to 19. Think about that. 28 down to 19. That's a $9 drop. 28 to 19, that's about 30%. a 30% drop. Now we hit there. Now we're going back up. We're sitting at 2086. We'll be looking at the 21. Nope, it's 2158. So the 2150s go 43. That's more than 2%. If you like SoFi, which I don't. Let's sit tight. What is SoFi paying? So, Fi. All right, so Fi. All right, here we go. Covered call on SoFi and the 2150s. There it is right there. One contract. And there it is. And here's Johnny. Tell him what he's won, Bill. Well, today we have SoFi. One contract. SoFi. 13 February, the 2150. Now, why are we doing the 2150? Because the stock price at the moment is 2158. So 2158. I'm selling it at 2150, picking up 40 bucks. It's 2,100. Well, what kind of rate of return is that? Well, let's find out. 40 bucks. Okay, that's just the profit on one contract. Well, one contract is 2110. And that is 1.9. 1.9%. If 1% a week is 50% by the end of the year, what's 1.9? It's got to be over 100%. All right, let's do this. Let's save this one. And that's number 5 for the day. All righty, so let's answer some questions, and we're going to call it a day because we got our 5. Come on. There it is. One covered call SoFi, 13 February, the 2150s. 40 bucks the profit. The investment, 2,100. And that is 1.9. 1.9%. 1.9. So that's it. 1, 2, 3, 4, 5. Yeah, we found our 5 for the day. Let's answer some questions and call it a day. All right. Why is your right eye like this? Well, thank you for that. I got stuck with a nail in my left eye. Okay? Once people hear that, they usually never mention my eyes again. But yeah, I got stuck with a nail. Alrighty, so let's answer some questions. What about NVIDIA? Jeff, take a look at the profits on NVIDIA. The dividend is 1 penny. Okay? Yeah. So what is it? 180. What is it? Let's find out exactly what is. What is it? Okay. NVDA. 185 bucks. Think about it. $185. Okay, the dividend is 1 penny. No. 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 Sorry. Nah, do not listen to that. Angie, thank you for that. Not quite sure. Moog makes great products. Why does Microsoft expire in 2 days? Okay, New Jersey. Microsoft is one of those few companies that have 3 options a week. Okay? Moog makes great products, get that money, got it. Why is the right eye like that? We already talked about that. Emily, Eli Lilly, a little out of my price range. LLY. Okay, who came up with Eli Lilly? Emily. Okay, Eli Lilly is $1,000 a share. That's $100,000 to do 1 contract. Yeah, out of my price range. Sorry. All right, NVIDIA's a no. CMG. What is CMG? Wait a minute. Is that Chipotle? CMG. CMG. Chipotle. No dividends. But Okay, there's the top, there's the bottom, shoots up. What's going on right here? Let's zoom in a little closer, the last 30 days. Interesting, okay? She goes up, 30-day top, comes down, 30-day bottom. Now she's going back up again. Does that make sense? Either it does or it doesn't. Jack, if I sell a call, does that mean the other person bought a put? Nope, not at all. A call is one thing. A put is a different thing, okay? So you get two options. You got the call option and you got the put option. The call option is full with opportunities with no obligations. The put side is full of obligations, okay? So if you sell a put, that means somebody can force you to buy something. If you buy a put, you can force someone to buy it from you. Obligations with puts. With call options, it's the right, not the obligation. So with a call option, you can if you want to, but you don't have to. A put option, you actually have to do something, depending on which side you're on. Are you on the receiving side or the sending side? So you got to figure that one out. TMC, the metals company. Isn't that relatively new? TMC. Yeah, the metals company. Now, don't get me wrong, it has opportunities there, but here's the thing. This thing was at $1 back in April. I find it very challenging for me to believe that something at $1 a couple of months ago can have 2 decades of profits. Think about it. I'm looking for companies that have been profitable for at least 2 decades. That's 20 years. If the metals company was $1 back in April, how could that possibly have 20 years of increased profits? Keep going, Mac. How you doing? Hiptonics, how are you? Cousin Astra, thank you for that. Sunggung, good evening. Simran Preetsand. Okay, interesting name. Praise, good evening. Bobby, what's going on? Leaky Riley, what's going on? Allie's Delicious Gyros. Good call on not buying MU on its an all-time high last week. Hey, I'm going to take your word for it. Something I normally don't do. Okay, so Dan, Tesla, that's a tough one. Okay, the only reason I say Tesla is challenging is because we can't escape Tesla. Okay? Now, don't say the same thing about NVIDIA, because NVIDIA is in the chip game. There are a lot of people in the chip game. Okay? So there's competition there. But Tesla, he's got his fingers into a lot of stuff. So there's no just one market. There's a whole bunch of different markets. But the challenge you're going to have with Tesla is it doesn't have any dividends, which means no profits sharing. So with that being said, how do you know when's the right time to buy? The reason I say that is because with most dividend stocks, they have a tendency to do the same thing over and over and over again. That's why we put them into a calendar, because the calendar tells us when the stock is going to move, usually. Because stocks move just before their dividend date. That's why I do dividend stocks, because knowing when they're paying their dividends also gives me the idea of knowing when they're going to move, because most dividend stocks move up. Hey, Chrissy, thank you for that, Christy. Most dividend stocks move up just before the dividend date. So by knowing when the dividend date is, that gives me the edge to know when the stock is going to move. And by knowing that, that helps me in choosing what stocks and then looking at the stock chart to tell me, is it a yes or a no for this week? Okay, so Tesla. Look at the last high, okay? The last high was at 500 bucks. Comes down and it hits 390. That's a $110 drop. That's over 20%. So you got a 20% drop. Thursday was the bottom, which means Friday was one day to the upside, if that's what you're looking for. Now, I don't look to try to find bottoms. I look for 2 days to the upside, then I jump in on the third day. Let's take a look at this chart for a second and show you a few things in there, okay? Number one, you get your high here at 500, and then she drops right to there. Then we have 2 days to the upside. 1, 2. And then on the third day, she was higher. So yeah, I would have jumped in right there. But I would have been SOL, and we all know what SOL means, okay? 2 days up, on the third day I jump in. So I would have jumped in at 450 because that's what the chart is telling me. Then it dropped again, and it did the same thing. It picked another bottom, 2 days up, and then the third day it opened up higher. I mean, it came higher also. Again, another false one. And then we have it right here again, up, and then here again, up. So, yeah, it's not perfect. Nothing's ever perfect. Granted, I like to buy at the bottom after it goes up 2 days. Okay, but for the most part, I don't do very much of Tesla because there's no profits, which means there's no predictability. What do you do for positive alpha? I smile nicely and say thank you. Righty. Fenbin, Marvel, MRVL. Ooh, check that out right there. What's going on there? Now, we could take a look at Marvel tomorrow because I like 2 days to the upside, not one. Okay, so we bottomed out on Thursday. Friday gapped up and kept on going. So I would look for another top Monday, for it to go up again. Heats, Procter & Gamble, PG. Nope. Okay, now Heats, you've been here long enough to know, yeah, bottom, shoots up like a rocket. Why are we looking at it if it's at the high of the year, or the high of the 90-day period? Yeah, no. Lilique wants to take a look at Robinhood. Same thing. We got the top right there. Check it out. The top drops, bottom on Thursday, Friday, 1 day up. If you like Robinhood, give it another day. All right, what else do we have here? All right, we did that. We did Microsoft. We did that. Cynthia, good evening. Run and Cook, can you list your top 3 favorite companies for covered calls? Well, yeah, Macy's. Used to be Nordstrom's, but not anymore. Macy's, Kohl's, Walgreens. Well, we don't do Walgreens anymore either. Well, Nike's good. Harley Davidson. Will not lose. Wants to take a look at S. What is S? Sentinel. Interesting. What do you do for positive alpha? Do you have a Discord? Yes, I do. GLW, Patriot Icon, GLW. Isn't that, hold on a second. Granger, GLW. Heats, show us your portfolio holdings. Blake, my son is 6 and he has a little understanding of what I'm doing. I want to help him understand. Blake, 1 step at a time. Okay? You know what, Blake, if you're interested, my 6-year-old grandson's going to be starting his. I got to coordinate with my son and my daughter-in-law to find out, what days can we get him to commit to. At least once a week would be nice. Okay, let's take a look at some more questions. Alex. Okay, good evening. Alush, good evening. Gurn Deepant, good evening. Tel Lee, okay. Stephen, good evening. Emre, good evening. Cyberlens. Stefan Muma, okay. Alex, thank you. Al's Delicious Gyros, thank you there, Mr. Al. Perish in Flames. What level does it make sense to use your method? It's a beginner's method, okay? Perish in Flame. It was originally created for my 9-year-old daughter. How do you not lose on a covered call? Oh, that's easy. The way you do not lose on a covered call is quite simple. Okay, whatever you buy it for. Okay, we're looking at this company right here, Sentinel. All right, perfect example. Are you ready? If I decide to do this company right now and I buy it at the current price, $13.22. Remember, when you buy the stock, you own it. You get to decide what to sell it for, and you get to decide what to sell against it, if anything. You don't have to. But how do you keep from losing? Never sell for less than what you paid for it. That's it. If you paid $13.22, never sell it for $13.22 or less. That's it. Starting with a small account, what are the beat dividend stocks for a new portfolio? The beat dividend stock. Oh, the best dividend stocks. Because the S is right next to the A. All right, so I get that. Dividend kings, dividend aristocrats, dividend champions, dividend contenders. Those are the best of the best. That's it. They're consistently profitable and they consistently pay out dividends. Load flow, what did you miss? You didn't miss a whole bunch. We found a few different companies. Oh, Tadio wants to take a look at Harley. We'll take a look at it next time. Okay, it's 12:30 where I am. Cool. Cool ain't cheap and cheap ain't cool. Good way of looking at it, Blank. What stock is this? This is Sentinel 1. That's what we're looking at the moment. Ooh, John wants to take a look at Citigroup, and I love Citigroup. I do. I'll take a look at it next time. C, Microsoft. We already looked at Microsoft today. Load flow, BTU. We'll take a look at tomorrow. Green boots. How do you keep track of all the transactions for taxes? All right, so green boots. I need you to listen very closely, okay? My corporation is in a state where there's no business tax, no state business tax. All right, where there's no, yeah. So I don't need to file taxes. Okay, so there's no corporate taxes in the state in which my corporation is enlisted. So by not having to pay taxes, why do I need to keep track of anything? That's the funny thing, because I went for a bank loan and said, well, what's your tax returns? I said, I don't have any. Why not? Well, because my corporation is in a place where there's no corporate taxes. So why would I file them? You know what I mean? Green, ITW. ITW, Illinois Toolworks, is a monthly optionable stock, which means they have options on a monthly basis, not on a weekly basis. So Illinois Toolworks is a no. Why tomorrow? Because the sun will come out tomorrow. I'm not quite sure what you mean by why tomorrow. Tomorrow's Monday. The market opens tomorrow, not today. User 4246, UPS tomorrow. Anonymous tomorrow. Okay? Emily, sorry. Tomorrow we'll take a look at that. Load flow, BTU tomorrow. Yes, I'm aware. ITW's Illinois Toolworks. You already asked. It was already a no. Oscar, how are you doing? Jennifer, how are you? BTU tomorrow, Coles tomorrow, Emily tomorrow, BTU tomorrow, CSX tomorrow, Microsoft we already did, HNZ. Okay. You're up really late tonight. Yes, I am. Thank you there. Hey, Eats Meets West. What's happening? Haven't seen you in a while or heard from you in a while. Yes, I'm up a little late because the ball game got over. Have to watch the football game. Granted, it's the only game I watched all year, and I was very disappointed. All right, let's keep on going. What were the first two? Give me a second before I go. I'll pull it up again. Why is CXX so cheap for the big four in the railroad stocks? Don't know. We'll look at it tomorrow. Richard, I'm late to the party. Did we look at Amazon? Not tonight, maybe tomorrow. Blake, what were the first two of the night? I missed those. Okay, Blake, don't go anywhere. We're going to open those up in a minute. The five for the day. Do they pay dividends? See, Will, I don't know because somebody asked me to take a look at them. Blake, PLTR tomorrow. Micron, we already looked at it. We already looked at Micron. Joe, did you do Coca-Cola tomorrow? Mark, Foster, tomorrow. Blake, tomorrow. All righty. What else do we have? Tony Hawk, there you go. CSX railroad stock is really cheap. Established railroad. Why is it so cheap? We'll take a look at it tomorrow. Corning, CLW is Corning. Any advice on seasonal charts? No. Is that state of Delaware? Yes, it is. You're streaming on multiple channels at the same time. Super Trucker. Yes, Super Trucker. 9 different channels. East meets West, thank you for that. Super Trucker, thank you. Yes, he does. Well, alrighty then. What is 1 with 4.1? Oh, Super Trucker, sit tight. Now, you do realize these are not stock tips. They're just observations. Does it matter to you if they pay dividends when you go in on a covered call? Absolutely. Now, the reason why I'm looking at dividend stocks specifically, okay, right here, helps if it was there, right? Right here, we're looking at an EX dividend calendar. Now, the calendar tells me when the dividend stocks are getting ready to pay their dividend. And the reason that's important is by knowing when a stock is going to pay their dividend, the stock has a tendency to go up in value. That way we know if the stock moves just before the dividend date, that gives us a little bit of edge over everyone else. Okay, C, but you pay capital gains taxes. No, I don't. Because see, here's the funny thing about taxes. Number one, they're voluntary. Number two, there's no law that says you have to. Number three, nowhere in that book does it say that they are mandatory. So, with the taxes thing, that's a path that you need to figure out on your own. Okay, number one, my corporation is in a state where there are no corporate taxes. So capital gains, I don't have to pay. Okay, now I live in a state where there are no personal income taxes. So the corporation, okay, is in a state where there's no corporate taxes. And I live in a state where there are no personal taxes. So do you see where it's going? Okay, does it matter? Okay, yes, we did. Okay, Will, does it matter to you if they pay a dividend? Yeah, because the dividend is a portion of the corporation's profits. So by looking at the dividend gives you an idea, is this company profitable more than it was last year or the year before or the year before? Because a dividend should increase year after year after year, basically telling you that company's making more money, and then more money, and then more money. Will not lose. That means no taxes, folks. Way to go. Yes, but you got to set up your account properly. Okay, if you have it in your own personal name, you're SOL. You get to pay the absolute maximum amount of taxes. If you have it in your corporation's name, well, the corporation pays at the corporate tax level, which is a hell of a lot less than the personal tax level. And then if your corporation is in a state where there are no state taxes, no corporate state taxes, then the corporation doesn't have to pay taxes on the gains whatsoever. So it all depends on how you want to play the game. You want to play in high heels? You want to play in sneakers? You want to play in shoes? Do you want to play where the big boys play? Do you want to play in a place where there are no taxes whatsoever? There are ways around it. And that you need a tax consultant, tax strategist. That's the word I was looking for. A tax strategist. And a tax strategist will show you exactly how, when, where, which, why, and who to set up your account. But that's a you thing. I just show you how I'm doing it. Okay, so what else do we have over here? Jack Parrish, good evening. How much do you need to get started? You don't need a whole heck of a lot, and it depends on how and at what level do you want to start. Now, my grandson's going to be starting out with $50 on a new account so everyone can watch as it grows. Now, he's 6 years old. So we are going to be walking him through how to do it, and he will be doing all the choices, with a little bit of nudging here and there. Calvin Hill, how are you? How much do you need to get started? What platform you got to choose? Use Thinkorswim. How much do you need to get started? Keep asking the same question. Yep, got it. IONQ. We'll take a look next. Now, why do people avoid simply buying the underlying puts and calls? Okay, so Adam, I don't buy calls and I don't buy puts. The reason being, most calls and most puts expire worthless. So why would I want to buy them? I'm a seller, not a buyer. How do you get started and how much do you need to start? We already talked about that one. All right. Also, okay. Giovanni, how's Dollar Tree look to you? We'll look at it tomorrow. Okay, thank you. TI, we'll look at it tomorrow. OWL tomorrow. Texas Insurance tomorrow. How about PlaySafe tomorrow? Tomorrow. Anything, I'm not looking at anything else tonight. Anything you guys want to look at, it's going to be tomorrow. Plain and simple. If you want to buy any particular stock, would it not be a good idea to sell a put? Maybe, and you're talking about the wheel strategy, where you sell a cash secured put first, and then after you pick up the stock, then you sell a covered call. Yeah, it works too. Oh, how about federal tax? Good question. But still, you need to talk to a tax strategist if you're concerned about taxes. I'm not a tax person whatsoever. Okay, Christy, thank you for that. Oh, Gakoro, thank you for that. Thank you. Huh. Oh, okay. That works better. Okay, good, good, good. Thank you, Mr. Green. What do you think about 10-to-1 split? Interesting. Who's doing it and why? Why don't you select Coca-Cola for covered calls? Because Coca-Cola very rarely gives out 1% every week. That's why. 30 stocks, then it's split. Okay. But you pay federal taxes, right? Federal corporate taxes to the federal government, not to the IRS. There's a difference. What state is that? Delaware. What stock is your first stock you ever invested in? Holy cow. I honestly don't know. It was that long ago. Super Trucker, thank you. Thank you. Thank you. Okay. All right, we're almost done. Got a couple more. Dang, all right. What was your first? See, I don't remember. That's how long ago it was. Is that a Carillion t-shirt? What the heck is a Carillion t-shirt? I have no idea. All right, so basically it. I'm done for the night. We're going to do this all again tomorrow. So same bat time, same bat channel. So catch you guys again tomorrow. See you guys over here. See you all tomorrow. Oh, we got a couple of questions over here. If you buy eBay at 84 and sell the 86, you only be making 1.8 if the stock rallies to 86. No. Hold on. Paul. Let me pull up eBay again for a second. eBay. Okay, so at this moment, Paul, okay, eBay is right here at 86.55. Bottomed out at 81.50. Now she's going back up again. Here's your 30-day high at 98. There's your bottom. Now she's going up. Okay, so at 86.55, if I buy it at 86.55, sell the 86s, I'm losing 55 cents right off the top. So you take the 55 off of that, now I'm walking away 132. Well, 132 on a $86 stock is still over 1.5%. That works for me because it's in the money. Now, more profitable at 87. That'd be more profitable. But I don't want more profit. I want more safety. Okay, I'm looking for safety first, then rate of return. Okay? What time do I do my shows? 9 p.m. Eastern Standard Time. The only reason we were late tonight was because the Super Bowl was on. Okay? That being said, you guys have a great night. We'll do this all again tomorrow. All right. And now the end is near. And done there. And see you guys next time.